If you've tried to buy a home in Arizona recently, you've probably asked this question: are we competing with Wall Street? And when you hear about proposals about banning large investors from buying homes, it sounds like that could finally level the playing field. But would it? Today I want to break this down specifically for Arizona without the hype, just the reality of what this would actually mean for buyers and homeowners here. Yes, how big is Wall Street? Let's start with scale, because this is where things often get misunderstood. National large institutional investors, the companies everybody thinks of as Wall Street, own less than 1% of all single-family homes in the US. Now listen, that's still over 800,000 homes, so it's a large number. Most rental homes are actually owned by small local landlords with just a handful of properties. So on a national level, banning large investors wouldn't suddenly flood the market with homes. But Arizona isn't the national average, and that's where the conversation gets more interesting. The Phoenix metro area is one of the markets where large investors made a concentrated bet after the housing crash. The biggest player locally owns thousands of single-family homes across Maricopa County. Now that still represents a minority of total housing, but in certain neighborhoods, subdivisions, and price ranges, the presence is noticeable. This is especially true in parts of Mesa, Chandler, Gilbert, Queen Creek, all through the East Valley and West Valley. In those areas, buyers genuinely feel like they're competing with deep-pocketed, repeat bidders, because sometimes they are. That is the big question. Would banning large institutional buyers lower home prices in Arizona? Probably not in a dramatic way. Here's why. Even in Arizona, these companies are still a minority of buyers overall. Here's what a ban would likely do. It'd reduce some bidding pressure in specific entry-level neighborhoods. And what we mean by entry-level is 3 to 4 bedroom homes. It'd lead to fewer all-cash offers in some zip codes, give some buyers a little breathing room, but it's not going to force these companies to sell their homes that they already own. It's not also going to fix the housing shortage, eliminate competition from small investors or other buyers. So the impact would be incremental at best, not transformative. Yes, the real issue. This is the part that doesn't make great headlines. The core affordability problem in Arizona isn't Wall Street. It's years of underbuilding, high construction and land costs, zoning and growth constraints, strong population and job growth here. Until supply meaningfully improves, banning large investors alone won't solve that problem here. What this does mean for Arizona buyers on the ground is, here's the reality. You're still competing more with other families and small investors than with the Blackstones of the world on Wall Street. Your real advantage comes from understanding which neighborhoods are investor heavy, knowing where competition is cooled, structuring strong and realistic offers, and focusing on payment strategy, not price. This is where local insight matters more than national headlines. So banning Wall Street from buying homes is a powerful headline. In Arizona, it might help at the margins in certain neighborhoods, but it won't reset the market. The buyers who win aren't the ones paying or waiting for policy changes. They're the ones who understand the local market and act intentionally. If you found this helpful, please like and subscribe. If you're trying to figure out how today's Arizona market applies to your situation, this conversation should be about strategy, not speculation. Thanks for watching.